Namaskar friends. Will United States tariffs shake India's economy? And more importantly, what the RBI governor said will surprise you. In today's video, we are going to break down India's monetary policy, the growing tariff war across the globe, and the warning RBI Governor Sanjeev Malhotra just gave. Why should you care? Because this could directly impact your loan interest rates, your savings, and even your business. What did RBI do? In the recent 3-day Monetary Policy Committee meeting, the RBI decided to keep the key interest rate, that is the repo rate, unchanged at 5.5%. The standing deposit facility remains at 5.25%, and the marginal standing facility and bank rate stay at 5.75%. So there is no change as of last time changes. What does this mean? Your bank loan rates won't drop immediately. They will remain stable. But RBI is clearly watching inflation, making sure the economy stays steady without shocks. What was RBI governor's big warning? Sanjeev Malhotra was very clear. The ongoing global trade tensions and US tariff announcements could pose risk to India's growth. What is the US doing? They are imposing additional tariffs on imports to protect their domestic industries, giving so many lame excuses. Why? To make foreign goods costlier and encourage local production. But what is the problem? The US is one of the India's largest export destinations. In fact, we have surplus trade balance with US. That means our goods become more expensive there. So the demand would drop, and that is a real risk. How is India's economy looking right now? The governor said the growth remains robust, though below our aspirations. RBI has kept its growth projection for 2025-26 at 6.5%. Quarter-wise projection is quarter 1 6.5%, quarter 2 6.7%, and quarter 3 6.6%, and the last quarter slightly moderating to 6.3%. It is only projection. Why the confidence? Good rainfall, lower inflation, raising capacity utilization, and strong government spending on infrastructure are supporting our economic growth. The construction and trade are likely to drive services in the coming months. What about inflation? The headline inflation has come down, giving RBI room to keep rates unchanged for now. But food prices, especially vegetables, are swinging like a roller coaster. The core inflation, excluding food and fuel, is steady at around 4%. But the governor warned inflation could inch up in the last quarter of this financial year. So there is some negative things the RBI governor expects. But what about the global picture? India is not isolated. Global economic challenges continue. Political uncertainty has eased, but trade tensions remain. Advanced economies are struggling with slow growth and sticky inflation. Public debt is high in global scenario. In that context, how will India manage? The governor sounded optimistic. India has strong fundamentals, comfortable buffers, and bright prospects in the medium term. The real challenge now is US tariff. They are targeting products from countries like India with extra duties. Of course, he has announced 25% all nonsense. For example, Indian textiles, steel, aluminium, and certain chemicals. There are challenges in this. Now imagine if other countries also start doing the same. India's export could take a serious hit. If exports fall, the rupee weakens. The foreign investment also takes a hit, and jobs shrink. And don't forget, even the prices of goods you buy locally could go up as an aftershock kind of a thing. But India is not defenseless. We have some strong points. The domestic demand, our market is very big, so the domestic demand is still very strong. Government spending on construction and infrastructure is increasing. Even in tough global conditions, India's growth at 6% plus is better than most of the countries in the world. So why didn't RBI cut rates further? Because it already cut 100 basis points since February 2025, something like 1%. And that impact is still playing out. Plus, RBI sees a new risk. Inflation could rise again. So its main job right now is to keep interest rates stable. Now the big question, will the US tariff crush India? No. Honestly, in the short term, no major shock. Why? India exports to many countries, not just the US alone. Our economy relies a lot on domestic consumption. But in the long run, if the tariffs keep rising, production costs may go up. If a full-blown trade war erupts, our growth could slip below 6%. That is why the RBI governor said we need to keep a close watch on global developments. Here is the takeaway. RBI has kept repo rate steady at 5.5%. Growth forecast remains at 6.5%. Inflation is under control, but food prices are unpredictable. The biggest risk, the US tariff and global trade tensions. But India still stands strong thanks to our domestic demand and government spending. So we don't need to bother. The impact, the negative impact to US is more than what India might face. The joke for the day. One guy tells his friend, "Bro, America put tariff on Indian goods." Friend says, "So, what does it show?" Guy replies, "It's like your girlfriend saying, 'I still love you, but every time you meet me, bring a gift.' That is a tariff, my friend." So love stays, but it costs extra. Because America says, India is our partner, India is our friend, but still they impose tariff. Namaskar.